Have you ever pondered over what happens to your money once it's safely tucked away in the bank? Does it sit there nestled in a vault, waiting for you to need it? Or does it embark on a journey of its own? Well, buckle up, because today, we're diving into the fascinating world of banking and money circulation. The first thing to understand is that when you deposit your hard-earned cash into a bank, it doesn't just sit there. Banks are dynamic institutions, not static money storage units. So, your money is not gathering dust, but is instead put to work. Imagine this: you deposit $100 into your bank account. The bank doesn't just lock that $100 in a vault. Instead, it lends out a portion of it to other customers who need loans, whether it's for buying a house, starting a business, or paying for college. This is the core of what banks do. They act as intermediaries between those who have money and those who need it. However, banks can't lend out all the money deposited with them. They must keep a certain percentage, known as the reserve requirement, on hand to ensure they can meet withdrawal requests. This requirement is typically set by the central bank or another regulatory authority. Now, here's where it gets interesting. When the bank lends out a portion of your money, the borrower spends that money, and it usually ends up back in a bank. The cycle then repeats, with the bank lending out a portion of the newly deposited money. This is known as the money multiplier effect. Through this process, banks are literally creating money out of thin air. This might sound like magic, but it's a fundamental principle of fractional reserve banking. The money in your bank account is just a promise from the bank that they owe you that amount. It's not physical cash sitting in a vault. Now, who controls all this money floating around? That would be the central banks. Central banks, like the Federal Reserve in the United States, use various tools to control the money supply, influencing interest rates and helping manage the economy. They can change the reserve requirements for banks, alter interest rates, or buy and sell government bonds in open market operations, all of which affects how much money is in circulation. In conclusion, the journey of your money doesn't end once it hits the bank. It's put to work, helping others fulfill their dreams and goals, while simultaneously contributing to the creation of more money through the process of fractional reserve banking. The central banks oversee this entire process, helping to ensure a stable and healthy economy. So the next time you deposit your paycheck, remember, you're not just saving, you're contributing to the financial ecosystem. Your money is playing a vital role in the grand scheme of the economy. It's quite the journey, wouldn't you say?